There are plenty of people who like the idea of a personal services contract as a way of paying a family caregiver and simultaneously being a nice strategy for getting money out of the Medicaid applicant's name. But what they don't like about this strategy is the tax consequences, right? The income tax consequences to the caregiver who is receiving this lump sum payment. And often I get the question, is there anything to do about that? Can you avoid paying taxes? One of the first things I say is I'm not a tax attorney, I'm not a CPA, and if your accountant has some way of determining that this is not a taxable event, I defer to their advice. Generally speaking, though, my understanding is if you receive money for services that you're rendering to somebody else, that is a taxable event. And one surefire way I know of not eliminating income taxes, but deferring the income taxes is utilizing an annuity. And there are companies that I work with that will, for free, take the lump sum and instead of let's say a $50,000 personal services contract, instead of the caregiver receiving $50,000, an annuity company would receive the $50,000 and they would pay the caregiver once a month over the course of a number of years. And in that way, the caregiver is not taxed on the full $50,000 lump sum. Instead, they're taxed as they receive the money. So you can split up the tax, you can defer the tax burden or extend the tax burden and pay it off over a course of years as opposed to all in the same year in which the income is received. So if you'd like to talk more about personal services contracts, if you'd like to talk more about how this annuity system works, please give me a call. I'll be happy to discuss it further.